Okay, I'm up. Let's see. Oops, everybody doing well? Welcome to Sunday. I'm sure some of you will have Monday off. So tomorrow there won't be any trading. I have work tomorrow, so won't be able to do this. Hold on, keep forgetting to put up. There should be a better way to hold on. Keep forgetting to. Okay, let's try this. Okay, nobody there. You know, I just noticed something when I put the chat there. Like some of the chat doesn't get through. So weird. Anyway. I know there should be a better way to do this. Can I even do that? Okay. Wait. Oh my goodness. Crazy. Okay, that's too... That is bad. Okay, it's not even doing what I want it to do. What the hell? Okay, this is too big. Sorry you guys, 1 second. Give me a minute here. Try to tinker with this technology. Hi Michael, thank you for joining. Okay, there you go. There we go. There. Alright, so that is open. That's good. Okay, so I have a few things lining up. Not much, just here chilling. How are you doing, Michael? How's your morning? Okay, let me wait a couple minutes real quick. I know a few of you might be joining later on. Cause more news coming on about meme stock again. CNBC is notorious, right? I haven't looked at this segment yet, so I just put it up. We'll go through them together. Seems like there's no recent news so far, so I don't know what meme stock they're gonna talk about, but we'll see together in a minute here. And then I'll show you a comment that I saw on one of my live stream that didn't get through onto the chat. So okay, let me kill some time here. Hi Lynn, thank you for joining. White Rabbit, hi, I'm new to your video. What's some recent thought about GME, its current price, and its upcoming fourth quarter? Oh, thank you, White Rabbit. I think I recognize you from Moran's, right? Thank you for joining. Not much, it's the same old, same old. I'm sure you follow, I'm sure you know all the updates already. So currently, just chilling here with all of you, but I appreciate you hanging out with me. Okay, Michael, I'm great. Hey, Lionel, thank you. So price action, not much there. Of course, tomorrow it's not going to be a trading day. So it's going to be a short week. It's a holiday, right? What is the holiday? President's Day or something like that? So the markets won't be open. My thought is that if the SPY is coming down, which, I'm gonna keep saying over and over again, I think if the broad market coming down, I'm sure the price of GME is gonna come down as well. But I always, tell people price actions very psychological. It's not indicative of what the company is doing. So, when people are panicking on the broader market, people tend to just sell. Doesn't matter, Russell 2000s or whatever, those type of ETF that has a lot of GME in it, it's going to be sold rapidly, right? And so my thought is that it might break this support line of $12, and it could possibly reach the single digit that they want you to think, right? To me, that's an opportunity. If it ever come down to that, and I'm sure most of you who watch my channel and Moran's and all that stuff is well prepared for that, right? Some dry powder or even some other position that you might have. My strategy is to have some dry powder, so for that opportunity if it ever come to that, but also to I've been trimming some of my other position in my trading account to get into Gamestop as much as I can before the earnings, right? But I don't know, I think, hold on, I was seeing something in the option chain on the SPY, and it's kind of curious to me. You see this, this is put, okay? And somebody brought to my attention to go to this particular date right here, April 19th. That now by that time, GameStop already would have their earnings already, right? And so perhaps this is what my thought is going to happen to GameStop. They're gonna, bring the price up as much as they can, right? And then they're gonna drop it back down along with the market, right? So whether the earnings is gonna be good or not, they're gonna, spike up the price anyway. I don't know how high it's gonna go to, but then after April 19, they're gonna try to bring down the price, right? How do I think that? Well, here's what I saw. Okay, so this is a call option, right, chain. So you don't hardly see any open interest over here, right? The most is 20,000 or 26,000 and the 600 right there, right? Of course, it's only like 2 cents per share right there. So you're paying $2 for this contract right here. Less likely to happen that it will go to 600 by that time, right? April 19th. And so these call options are in the money already. But if you look at the put open interest, it's much more interesting, right? So not much here, in the immediate drop, but look, 55,000 contract, 64,000 contract, right? There's a lot more put option being open here. So usually, and then if you go down even further, Look at this, 100,000, 190,000 right there, right? And then look, 300,000 call. I mean put being bought right there. No, open interest on put option, right? So for those of you who doesn't know, when you when you buy put, right, you are betting that the market's gonna go down, right? And they think that the market's gonna, a lot of open interest around this price point right here, around the 400 price mark. So what does that tell me? It tells me that, the institution or whoever knows about this might be preparing for the drop, and it's going to drop down to 400. Right now it's 500, right? So it's just something to look out for. But I wonder what the chain is before the earnings for GameStop. Let's see. So there's a lot of call option over here. The highest open interest in terms of numbers of calls contract is close to 40,000 right there. Let me look at the put. Okay, there's a lot of more put option over here. People betting that it's coming down before GME earnings right there. Yeah, perhaps these open interest right here is going to, so typically what market maker would do is they would try to find that, max pain level. I wonder if I see it here. Where's the max pain? So max pain for that week before GME earnings is 475. Okay. So it's down from here. 475 right there. Yeah, if the max pain is that low, I'm sure they're gonna try to bring it down that low. Right? That week before GME earnings. So that's just my thoughts, right, based on the broader markets. And market maker has their way of hovering right around that max pain level, right? And so we all know what happened to GME too. If you look at the GME option chain the same way, and you would understand why it hovers around the price that it is, because of market maker, right? They have the ability to bring the price up and down based on how many people are betting on it. So let's see. So for this coming week, 23rd right here, max pain for GME is going to be $14. So just be on the lookout for $14 right there. Open interest, obviously there's a lot more contract at the 20 for call size of thing. And then down here, there's a lot of put option right here, meaning that, hey, technically if it ever come down to $12, it's going to drop down to 11. Because these contract would be in the money, right? People would be able to sell GME at $12, right? But yeah, for now, max pain is 14. Now, max pain could change, depends on how many open interests are being open around that time. People are gambling, right? Or gamblers, they just bet up and down. And this is why call option is so risky, because you could lose 100% of your bets or whatever. But if you own shares, you don't care. You don't care the time horizon. You just buy one at a time and all that stuff. So that's the strategy, a long-term strategy. Yes, it's boring, but hey, it keeps you a little bit sane, right, in the market. Okay, so let's look at the one before earnings. Right here, what's the max pain there? Still $14. Okay, there's a lot more call open interest right there. 9,000 contract, and a lot less put for GME right there. So yeah, I don't know how to interpret that, but okay, let's look at April 19th. Okay, April 19, it seems like max pain is 15. Now again, these number could fluctuate at moment's notice, right? It really depends on how many people are gonna bet up and down. But it seems like after April, it looks like put contracts are more right here. So the support might be around 12 and 11, right? Because again, if it ever comes down to that price level, the market maker doesn't want, puts to be in the money, so to speak. But if the broader market come crashing down, it could cascade down as well. So hey, it might hit single digit, but that's what I'm always preparing for the worst, you guys. It doesn't mean that it's going to come to that, but prepare for the worst, hope for the best type thing. But hey, if you're a long-term investor, you don't care about all this stuff. Price is psychological. Okay, let me read the chat real quick. Yes, I am subscribed to Moran's. Okay, good. Thank you, White Rabbit. Appreciate you. So your question right there, I hope I answered some of that already. Upcoming fourth quarter, obviously I think we're gonna do amazing. I know, like, I have my own prediction too. Like, Moran's thought it was going to be $100 million, but I feel like I'm more optimistic on that because fourth quarter is pretty good, right? Every Christmas sale, well, really depends, because we close some stores down, but I think the e-commerce size of thing is going to be more my thought is that we might sell more online than the actual store itself, but we'll see. I think as far as Twitter right here, they've been promoting a whole bunch of stuff, new titles, pre-orders. So I have high hopes. I think we might hit $200 million net. Just my thought, right? A girl could dream. So let's see. What did I do earlier? I think on one of my live stream, I did a kind of breakdown of how I got to 225, right? Because I was averaging it down, right? On average per quarter from here to here, we're making $125 million per quarter. That's on average, right? That's including the fourth quarter as well. But if you take into account how fourth quarter we're selling at least 30% more, right? 30%, not 25%. Then that $100 million of net income going up is turning out to be 200 something, right? Let me see. How did I do this? Okay, so here's how I got to 125, right? Of course, there's a lot of assumption going in on that prediction here. Is the assumption is that we're gonna come out at $2 billion right here, right? $2.2 billion. So that's the assumption, right? We can't assume that because we don't know the exact number. But if we could get that would be great. Now the assumption is we're gonna be able to do 5.9. Okay, so that's what I'm assuming. And so with that assumption, hold on. I mean, if you were to subtract this to this, that's $500 million, right? And then you divide that by 4 because that's per quarter. That's how I got to 125. And then this is net, by the way. So that's not even including in the marketable security and all that stuff too. Perhaps we're gonna get more because, I mean, slightly more, unless we've been adding more to that pile right here. You see, like, it used to be 300 million, now it's $300.5 million. So I'm sure slowly, we're probably at 40 million, or try to top it up to $350 million in marketable security, right? Just to get to that, compound interest type of effect here. Now we all know that the Fed may not, cut the rates at any time soon in March because of the data, right? Because Jerome Powell's always come out and say, hey, we're data dependent, right? So recently we just had a CPI, and it's pretty hot, quote unquote, meaning that inflation is coming back slowly, creeping back up again. It's not at 2%. It's like 3 point something, right? Hold on, let me see. Let's see, what was the inflation number here? CPI. Right here. So this is year on year, right? It comes out to be 3.1. The expected amount was 2.8. So if he is telling us the truth, he's not going to do anything to the rate cut. So we might just stay on whatever we are at right now, right? For another quarter. So this is the expected trend. Of course, this is just a projection for this particular one. Quarter 2, they're predicting that it might come down 25 basis point. Again, it really depends on the Fed, right? The Fed keeps saying, oh, there's one more rate hike for this year. Like when he was, a year ago, he was saying that we might hike today or this coming March, but it seems like the economy is not doing well, and so he's just keeping it at this price point, right, or at this rate. There might be something afoot here, and of course you've heard about bank going under, like regional banks and all that stuff. So those type of thing, and then the commercial real estate price point is kind of like come crashing down slowly, obviously. Of course, you don't see that on the news. So my thought is that I'm sure Ryan Cohen knows all about the Fed decision and kind of predicting the trend. He's a pretty smart investor himself, so I have no worries that he might not be able to manage the money, right? And it's very smart that he is kind of split some money to kind of stash away for the interest in accruement of things, right? But yeah, so let's see, every quarter. How did I get to $200 million net? Oh, 30%, yeah. Anyway, I could do a separate video on that, but I don't want to waste too much time here. I'm ready when it's the single digit, I've been consolidating my losses and go, okay, 75 in GME, yeah. Nice, Lynn. Basically ready to buy close to single digit. Okay, good. Has GME been lower than a Class A company? Wait, what are you talking about? Can you rephrase that question, Lionel? You mean Class A common stock? I'm not understanding that. I would be sick of... Wait, it would be sick of Jimmy Store Soul custom a very variety of keyboards. Oh, like Linux. I don't know how to say this one. Sorry, Lynn. Oh, you mean like if they have their own brand, like customize keyboards. I'm sure, I saw something about the controller. What was it? Right here. This is pretty cool. You have people, I'm sure people would love to have different type of controller out there, and it's pretty cool graphic right there. Very hip, right? But I'm not sure if that's what you mean by that. Yeah. But I think they have their own brand too, right? Like GME branded product. That's pretty sick. Let me see. I know, and some of these people who coming in, like Winthrop, for example, yesterday, it was like, oh, the world doesn't need what GME offer. I'm like, okay. I beg to differ. I think, building a brand that people recognize takes so much time, you guys. Like, it doesn't take 3 years. And with GME too, with the negativity in the news, it's really hard to get people, to kind of change their hearts and mind. But until, we're doing consistently trying to, delight customers. Like, this is what Ryan Cohen here for, right? I think they're world class in trying to, build something that is kind of recognizable. Number one, I'm sure everybody recognizes what Gamestop is, but currently because of the decades of abuse in the media, and people on YouTube, who still work for the old leadership, and then they kind of like paint it a broad brush as if like, oh, nobody wants to work for GameStop because this and this and this, right? And those type of narrative needs to be ironed out, and we're doing pretty well. It's pretty generational. If you you could change hearts and minds of those people who have that type of sentiment on the company based on what you could offer them, right? And so long as we keep our door open, the company itself, and sell cute collectible stuff, right? that people love, and also too, like hardwares and all that stuff, that big ticket items that gamers use, really, PC components, an actual PC itself, right? These type of thing matters, right? And of course, brand loyalty with pro memberships and all those stuff. It needs to grow, yes, but slowly but surely, I'm sure we're going to add more and more membership based on that. But but those type of things takes time, and people's like, it's been 3 years, it's been nothing, right? Nothing but burning cash. Okay, well, is that true? You look at the balance sheet, it's not that much of a burn. I mean, if you think $2 million per quarter is too much for you to bear for a company this size, then that's on you, right? That's perhaps you need to look at a different metric here. Hold on, let me see. So last quarter two, quarter two, we only burned, well, on average for this 2 quarters, we've been burning only $3 million, right? Burning. We only lost $3 million. And I'm sure like most of that money is due to conversion, right? based on Europe dollars or Australian dollars. So just due to the conversion alone, because dollar has been more expensive, and so if you sell something, in Europe or whatever other currency, you have to switch it to dollars. And so I'm sure that's probably taken account the fact that they were, losing value from other currency. So there you go. So technically we don't really lose anything, right? It's just a minuscule amount of loss here that we could count as, okay, hey, it's just a fluctuation of currency here around the world. And so if people don't really take an account on what's happening in the world, they just say, GameStop lose money, burn money, and all that stuff. But also too, what they could do this quarter is to increase, all they have to do is just increase the marketable security to maybe $100 million right there. All of those stuff would be ironed out already, right? Because with $100 million in marketable security at 3%, 4%, or even 5%, if they could get that, right? That would equate to $5 million a year, right? Just doing nothing at all, just parking your money there, right? Because they have the money to do that. So hey, a girl could dream. But as far as this retaining, oh man, if we could zero this out, $275 million, whew, that would be amazing. But hey, because apparently you could do what is it, dividend, right, if you zero out that returning earnings. So, but within 2 quarters, I'm pretty sure that we're gonna be able to clear this out within 2 quarters, right? So that's just my thought there. Yes. So wait. Has GME been lower than Class A company? I still don't understand what you're talking about. Well, I know. Rephrase that question to me. For me. Okay, so let me get to the news here. Of course, I haven't listened to this at all, but let me speed them up a little bit here. So let's see. I'm curious to see what this segment is about. Let's take a look at it together.
Talk about this so-called meme stock mania part 2, which kind of reminds us of the GameStop and AMC and Reddit, the dumb money days, and get some historical context with not only Investopedia editor-in-chief Caleb Silver, but a gentleman who led our basketball team when we worked together to the New York Urban Professionals title. My man, I was terrible. And we...
Perhaps they're setting us up for that. I don't know. Or, watch. They're going to steer it to other company, not GME, of course, right?
worked together a lifetime ago during the first internet bubble. And that's kind of why I tried to post that picture. You guys have done a great job during all the meme stock stuff. Are you seeing any similarities between either one?
Yeah, some of them are bubbling up, unfortunately, which is maybe the irrational exuberance behind a lot of these stocks. Now, some of them have good stories. SMCI, their super microcomputer.
SMTI. See, they're pumping SMTI. We know that, right? What is SMTI? Remember? Ay. Hey, people, man. I hope people don't fall for this, okay? SMCI. So this one is the one that I covered yesterday or a few days ago, that has the same CEO that had a CFO back in 2020 that had an accounting fraud. So this is the same CEO that was in charge then. I'm not quite sure if it's the same CFOs that did this, but all they had to do, because the SEC, prove it and everything, but they were only getting fines for that, right? And of course, get to, what is it, accept settlement or something, accept waiver and consent, so that they don't have to admit any guilt, right? So while these things should be, prosecuted, and people should go to jail for this because it's accounting fraud, right? If I misaccount my own, tax, I would go to jail for this, right? And wouldn't see the light of day. But when these type of company that is like billions of dollars, billions, multi-billion dollars company right here, misaccounting, whatever, on their balance sheets, inflate their revenue when there wasn't any revenue to be recognized, right? Those are fraud, and they're able to be, there you go, still trading until this day. Like that was 4 years ago, by the way. The same CEO that is still in charge till today. And now they're pumping it on the news saying it's a meme stock, right? And again, these are not meme stock, okay? They just put it right in front of you, to have more people buying at this high level, so that the people that was there before, and I'm sure it's probably the same, corporate, corporate, I can't even say that word, the same type of people, the private equity and all that stuff, right? Because I have not looked into the board of director of this company, but I'm sure it's the same figureheads here. So I wouldn't buy it, right? Not buying it at all.
They're making servers, leaning heavily into AI. Does that mean the stock should be where it is? The CEO now worth $7.8 billion. So big pullback today. Some of these others, though, sounds like a little bit of a return, not to the 90s, Brian, maybe the 80s. Roadhouse, little Patrick Swayze going on there.
They're remaking that movie, by the way.
Absolutely.
With Jake Gyllenhaal.
Can't wait.
That's sacrilege.
Abercrombie and Fitch, that's very 80s. My Teenage Girls.
Huge shirtless models.
Baggy jerk. Well, they've stayed.
We know what Crombie and Fitch, Marantz was covering that too.
They've cleaned up their act.
That was in the 90s, though.
Private equity.
They're coming back. So a lot of this is that. And as the great Jimmy Cliff would say, the harder they come, the harder they fall for some of these. And you just have to look back, not just to the 1999s, early 2000s, but 3 years ago when meme stock mania peaked, coming out of COVID, right? February 12, 2021, vaccines were rolling out, and that was the top for so many meme stocks, and they have fallen mightily since.
Okay, Jimmy Cliff, I'll come back with you with the toots and the Maytaus, right? SMCI had a pressure drop today.
Oh.
You like what I just did there? And then listen, it's don't want to make light of it because a lot of people got crushed, especially if they're messing around in the options world. You guys do as good a job as anybody at seeing what people are looking for. What are they looking for? What are they trying to learn?
Yeah, what's interesting is they're not necessarily looking for fast money. So a lot of the money going into these stocks doesn't necessarily feel like that retail flood that we saw back in 2021. People are still being cautious, more optimistic than they've been in a long time, but also still looking to protect themselves because I think a lot of people don't necessarily believe the rally. Maybe the air's getting thin up here at these new higher highs because it has been driven by just a few stocks. So a cautious optimism, but usually you get that when things start to fall apart a little bit. And what we're seeing right now is a little drug.
What is it? What did it say? Not heavily shorted, not heavily hyped on Reddit. Modest trading volume. Modest? They show GameStop and they say modest trading volume. Heavily owned by institution. Heavily owned by. What's different this time? Okay.
Drumbeat of this just might not.
So they're pumping, stocks that are heavily owned by, hold on, let me see, institution, right? You see, look, institution owned 70%. Of course they would pump this up. And they still call it a meme stock? Really? Crazy, right? Like the psyop on this thing. Like I'm baffled on that.
Hold up, especially for some of these stocks.
And I feel like to your point earlier, Caleb, sorry, these are names, like, in the meme stop, AMC, it's a movie theater chain, okay? But they were closed down.
It was a reopening trade. They bought a gold mine.
GameStop, a retailer some thought would go out of business. SMCI's got a huge business, a real business, to your point. NVIDIA loves them. Their servers apparently remain cooler. Texas Roadhouse, people tell me.
Wait. I missed that one. Hold on. I missed that one. I was distracted. Let me go back. I heard AMC.
Out of business. SMCI's got a huge business, a real business, to your point. NVIDIA loves them.
No. Further, a little bit.
Might not hold up, especially for some of these stocks.
And I feel like to your point earlier, Caleb, sorry, these are names, like, in the meme stop, AMC, it's a movie theater chain, okay? But they were closed down.
It was a reopening trade.
Okay, so in the meme stock, of course, they're bringing AMC again. We all know what AMC is, right? Private equity and all that stuff. And this particular channel, CNBC, is riddled with private equity, right? They always, bring the private equity angle in. It's like, remember there was some guy who had $2 trillion worth of, asset under management, coming in touting, oh, private equity, has been able to, scathe this pandemic and right? Try to pump it up as if it's something great. But those are the those are the same actor that is trying to pin AMC with GME, saying that it's the same thing. It's not, right? And we all know why he's bringing up AMC in this segment.
They bought a gold mine.
GameStop, a retailer some thought would go out of business. SMCI's got a huge business, a real business, to your point. NVIDIA loves them. Their servers apparently remain cooler. Texas Roadhouse, people tell me, is fantastic. They're packed every time. You got to get there at like 4 o'clock to eat by 6 o'clock. I mean, ANF, somebody's got to win the retail world. Not everybody can go out of business. So I do feel like this is a little different than 2 years ago.
So Texas Roadhouse, I bet you anything, if you look into that, it's probably owned by private equity again, right? Again, there's a reason why they put these names along with GME, so that you think it's it's GME 2.0, right? The same psyop here with different company.
It is, and there's other differences that are super important that your viewers should recognize here. Okay. These stocks are not necessarily heavily shorted. They are not on the top of the most shorted stocks list. That's interesting because
That's not true. With GME in there, that's the list. It's remained to be seen, but 22% is pretty high, in the financial world. But we all know what it is. I'm only willing to say 22% is being shorted for GME, right? But all of those stocks, it might be true.
Back in 2020, 2021, there was a backlash against those short stops. These are not heavily hyped on Reddit. I was all over Wall Street Bets today. Not a lot of conversation around any of these stocks. Modest trading volume. We're not seeing a surge in trading volume, just a steady drumbeat higher. Now, higher than usual, especially as these stocks ascend, but it's nothing like we saw 3 years ago. And a lot of these, Brian, are heavily owned by institutions. Institutional investors that a lot of us have our mutual funds with, or our 401ks. Heavy institutional ownership here. This is not a huge retail flood of traders trying to put these stocks up and get out, but there might be some activity there, which is why you're seeing those extra percentages higher. The question is, how long can this last? And the first person out the door, it might be the person that makes that bag. The rest of the people are going to see what happened 3 years ago when these stocks fell out.
So let's talk about this.
And it's curious too. It's like when he was showing GME this price, it hasn't been pumping at all, and then they just show it there. There's no, it's blatant to me, right? Because I've been kind of following, the news how the news covering GME versus other, quote unquote meme stock. And, they do stuff like this all the time where they kind of conflate GME to, all of the other meme stock. And again, this is a psychological operation that they're doing to make you believe, like, these people coming in, I bet in a minute here, try to say GME is a meme stock. And that term alone, it's clear to me that it's like, when you try to character assassinate somebody, you go after them, like, personally. And you call them names, you call them, a terrorist, organization and all that stuff. Like, this is the psyop, right? You make the company that is just a company who's trying to survive in this environment, right? Whatever they're doing is legit, right? We all know what GME leadership has been doing. These past 3 years has been, nothing short of miracle, nothing short of an amazing, a maneuver of things, right? To try to iron out those type of mess or untangle those mess that was 10 years ago. It's not easy, it takes some time, but 3 years is nothing, right? 3 years is I guess some people here said 3 years is a lifetime in a financial market. So it takes somebody like Ryan Cohen to take a lifetime of turning something so tainted into something that is great, right? But again, battle is still there, right? You still have to battle these type of news media, right? These type of people who are trying to kind of mislead you into thinking that somehow GME is a meme stock, right? That status is going to taint us for a little while, but nothing keep us down, right? If we have good earnings, quarters by quarters, years by years. I have no reason to believe that these people would still be on the sideline, right? To me, I think the reason why they do all this stuff to try to keep the price of GME down is because they want to accumulate slowly, right? Slowly but surely, they don't want to, retail to gain more and more, ownership of this company. And then they try to bore you out too, right? It's almost like taunting you with all of these gains of Nvidia, of some other stock that is being pumped right now, trying to get you to buy into these companies at a higher valuation, so that they could get an exit liquidity from it, right, from retail. And so I don't know, just my thoughts and opinion on this particular segment. Again, I haven't seen this before this, so I'm just live reacting to this video right here. I don't know if you guys have any questions or anything. Feel free to ask me. I was, of course, watch Moran's recent Connect the Dot was eye-opening, obviously. Big Lot, obviously, I didn't know all of the ins and outs, and it was a good 2 hours to waste on this. Waste, I said waste loosely, but it's a, what is it called? It just go to show you, because right now Big Lot is in that beginning stage, right? And the playbook is there, and it's like something that they do over and over and over again, right? Regulators should be aware of this. I'm sure they are, but they don't want to, rock the boat, right? I'm sure the SEC people are working at the SEC right now, scramble themselves to work for these type of firm, because that's how they do it, right? They have the protection from, we're just here to try to turn around the company. Is that true though? Is that true? Not really. And of course, like PayPal, I was watching a segment by a gentleman right here. PayPal, I think he is a fan of PayPal. It's just that, let's see, in this segment right here, he was saying that, the leadership are transforming this company to whatever, right? And he was like, leadership said that it's going to take a couple years in order to get to where they want to be, as PayPal going to shock the world type thing. But I think what he doesn't realize is that the leadership in PayPal, we all know, due to Moran's, right, that they are private equity, right, run by private equity. And so apparently they were downgrading by a couple institutions right there recently in the past couple of weeks, and so of course JP Morgan's want to be a buy, and then there you go. JP Morgan is very notorious for private equity base, lenient to private equity. Of course they do business together, so that's why. Not saying it's gonna go under anytime soon. I'm just, they have way too much asset to kind of dismantle, right? 20 something, I don't know, hold on. What's the asset for this company? I mean, good PE ratio, right? I mean, 15, that's not too bad. But because of the leadership that is kind of controlling this company, doesn't really matter how much you make, right? If the leadership's going to continue to give themselves bonuses, to give themselves, their friends, the assets that, or I don't know, like favors, right? Overpaying for their services, like BCG, right? The consulting people, consulting group, Boston Consulting Group. Those type of people overpaying for the service because, they get the board of directors to sit on PayPal, right? So any services at all, it's going to go towards that. And so I'm sure at some point, profit margin's going to be continue to trend down. So forgive me, I haven't followed, PayPal closely as GameStop, but from what Morans was saying about the company, it's about to kind of do a 180. Let's see. I mean, there's some evidence of like loading up on debt, right? Hold on, let me see if I see this here. Short term. Goodwill is $11 billion right there. Current debt, not yet, right? But look at the long-term debt right there. So $9 billion. There's some evidence that they paid off $1 billion worth of debt there, but look at the liability increase, right? Noticeably, I don't know. I mean, look, from quarter to quarter. In one quarter, they have loaded liability. Right there. From here to here, how many billions is that? So yeah, 62 right there. So $4.4 billion worth of liability in trailing 12, sorry, in a year is loaded to this company, right away. But it looks like they have, hold on, they increased their cash by 9%. Okay. 2 million receivable, current asset. So these are the assets that they are coming after. No, 80 billion. Okay. Was it because of the income? Okay, so revenue up 8% there. Cost of goods services, cost of revenue. Expenses. Okay, looks like they cut down expenses. Operating expenses, 2 million. Okay, so they do have good net income there. I mean, yeah, it's a good company. I'm not saying it's gonna go under soon, but again, leadership is more important. If you have terrible leadership, it doesn't matter how much money you make, you know, they're gonna waste it all. In my opinion. All right, I guess I have no opposition here. Seems like I'm preaching to the choir here. So in that case, I might just end it early, you guys. Let's see. Let me try to make sure I have everything here. The thing that's kind of like concerning to me, look at this. 5% worth of GDP is in the deficit for the government budget. So we've been operating at a deficit for, look at this, in COVID time, 15% down from the GDP, right? 15, 12, and now, we lose less, but this accounted for trillions of dollars right there, trillion. Value, yeah, that's $21 trillion. Last, previous, $12 trillion. Ridiculous. Fiscal. Oh man, we're in trouble, you guys. We're in trouble. So the projection is that we're gonna be lower, but it's gonna be around 5% in the negative. So there's gonna be more treasury bond being sold. And due to the inverse nature of, the yield, the lower the value, the more yield is going to be higher. So instead of 5%, 5.5% now, it might have to go up to 6% before anyone want to buy U.S. debt, right? And that's the predicament right there, because if you need the money to operate, the government, whatever, Social Security or the military budget and all that stuff, then you need to sell that debt to whoever want to hold it. So the challenge is like, if people don't support whatever the U.S. is doing, around the world, that might be a challenging thing to. It's like, why would I buy your debt so that you could bomb my country, type thing, right? So, but their allies, the Australians, I don't want to go into the geopolitical things because I'm not well versed on that. I can't talk about it as if I know a lot. No, I don't. Okay, I guess I'll end it for this one right here. It's very refreshing to me to see video like this. This is like a text-to-speech video, and promoting GME as a buy, and with this one also too, it was saying, hey, if you buy at this price point, in a couple of years you might stand to profit. But you have to hold it for a couple of years, right? So this is a refreshing thing to hear about, buying and holding for a couple of years in order to kind of, it's oftentimes people are like, oh, buy now, tomorrow it's going to go to $100,000, right? It doesn't work that way. It might, but I'm saying, this type of video you don't see often. Frankie Mohammed, I saw him earlier. I don't have anything to mention there. Let's see if there's any other meme stock thing again. Let's see, huge rally. They're promoting it like crazy. Avoid buying the SPY. What is this? Eli Lilly trading desk. Call of the day. $6 trillion in cash on the sideline will come into play this year. Payne Capital. NVIDIA assessment. Assessing. This is 5 years ago. Let's see. Sorry, you guys, I'm trying to kill some time here. These are billionaire by Hawaii. Oh, let's watch this real quick. 3 minutes.
America's richest have been buying in Hawaii for years, but no one knew exactly how extensive their holdings were. To figure it out, Forbes spent months digging through thousands of property records in the state. The results were astonishing. Just 37 billionaires own at least 218,000 acres. That's more than 5% of the state's total land and 11% of total non-government-owned land. That's likely even higher, given the lengths to which these billionaires go to obscure their ownership. Expressed a different way, those 37 people, equal to just 0.003% of Hawaii's total population of 1.4 million, own more than 10% of the land. And the pandemic-era luxury real estate boom, which pushed housing prices even higher, has heightened tensions between Hawaiians and wealthy out-of-state landowners. One of the highest-profile billionaires in the state is Oprah Winfrey. A year ago, she scooped up 850 more acres on Maui for $6.4 million, adding to the nearly 1,300 acres she already owned on the island. Winfrey first bought a ranch on Maui 2 decades ago. Her land was left unscathed when wildfires ripped through Maui last August, incinerating 6,625 acres and killing 100 people. In the aftermath, Winfrey and Dwayne "The Rock" Johnson set up the People's Fund of Maui.
That money is going to go to one of many.
I remember that one. People were tearing her to shreds. It's like, you are a billionaire and asking for $10 million in donation. Really?
residents
Hi Jay, thank you for joining. I'm kind of on my way out, so appreciate you.
who have been displaced in Maui.
with Winfrey personally contributing $10 million to the effort. Larry Ellison, Oracle co-founder and Hawaii's biggest billionaire landowner by acreage, bought about 97% of the island of Lanai for $300 million in 2012. Since then, he's decked out the island with a wellness retreat and luxury hotels, but as locals have complained, scant affordable housing. Steve Case, the AOL co-founder, was born and raised in Hawaii. Case is now the state's second largest billionaire landowner with 57,000 acres, including his 35,000-acre grove farm on Kauai, which leases out land for sustainable development projects. Mark Zuckerberg, Meta's co-founder and CEO, spent at least $145 million on land that he's turning into an enormous 1,450-acre, partially walled-off retreat in Kauai where he's raising beer-fed Wagyu and Angus cattle. In an Instagram post, he quipped that, "Of all of my projects, this is the most delicious." Frank Vandersloot, the billionaire founder of health and wellness business Melaleuca, owns the historic 105-acre Valley House estate in Kauai, where parts of Pirates of the Caribbean and Jurassic Park were filmed. An advocate for localizing Hawaii's beef industry, he operates the state's two largest meat processing plants. Hoi Kling Chan, the Malaysian tycoon, owns a third of the island of Molokai through his conglomerate, the Hong Leong Group. Until 2008, Kwek operated an enormous ranch there, including a golf course and a hotel, but he ended its operations after the state rejected his development proposals. Now, island residents are trying to buy it back. Locals hope that Hawaii is more than just a playground for the rich, but time will tell if these billionaire residents prove otherwise.
That's crazy. That's crazy. Anyway. Alright, I'll end it here. Thank you so much for joining, and I hope you learned something.